And so when I look at the fundamentals of the market, the financialization and all these stock indices, all the retirement accounts, the stocks and bonds, everything is inflated well beyond what it should be worth. And so, yes, right now it's basically there is no longer any markets, and so everything is kind of manipulated. But there is some method to the madness, and we can talk about that later. But but at least now. The precious metal community has always said that there's been manipulation, and there's been some others in the industry, like Jeff Christian of CPM Group has been a staunch opponent of manipulation, and now they've come out with proof. So at least we're vindicated there, but I think the value of gold and silver are going to rise much higher in the future, with or without manipulation of the markets.
Now, your focus is completely different than many other analysts. You focus on energy and the collapse of oil. And you've said that energy is the key to everything. Can you just give the people a little bit of background of what you do and why you believe energy is the key to everything?
Dave, when I first started investing in silver, and this was back in 2002, I did it. I was reading Ted Butler, and I was interested in silver and gold because of not only as a store of value, but silver because it would be more used in industry. And so, and then we had the big price move up, and as the economies were moving up until 2011, and since let's say 2008, I started really understanding the energy and how it impacts everything. You know, when a person's sick, they say, "I'm so sick, I don't have the energy to get out of bed." Well, let's say you do have the energy to get out of bed. You've got to get in your car, drive to work. Well, you better have some gasoline in there. So energy drives everything. And unfortunately, the mainstream media, even the alternative media, look at the energy sector as a sector, like the healthcare sector, the tech stocks, or the retail sector, or the housing market. Well, all those markets, all those sectors are useless without energy. So energy is the driver that drives everything, not finance. Finance steers the economy, or it's supposed to, and it's steering us over the cliff. So I've been looking at what's been happening with energy. And there's the theory of peak oil, and some people believe it and some people don't, but I've gone well beyond that. And it's the energy return on investment. For example, in 1930, the United States was producing 100 barrels of oil for the cost of energy of one barrel. So we had 99 profitable barrels that we could use in our economy. Well, now we got shale oil on. It's 5 barrels for the cost of one. So there's only 4 profitable barrels. We see this is bad news because our society, the United States, needs a much higher energy return on investment to function, to have all the infrastructure, the modern agriculture, the roads and bridges and waterways, and healthcare, education, entertainment. All that needs lots of energy. And according to some of the analysis, it's like 20 to 30 to 1 energy return on investment. Well, we fell well below that in 1970. It started to decline in 1970, and it's been falling ever since. Well, the interesting thing, Dave, is our debt has gone exponential since 1970, as when Nixon dropped the gold dollar peg in 1971. So the energy has been the leading indicator, or let's say the leading reason why we have all this debt, why there's all this manipulation, why everything's propped up. And the energy will actually be the factor that will destroy everything. And this is the same thing in the Roman Empire. It was the same deal. The energy return on investment fell in the Roman Empire. Now, the one thing about the Roman Empire is they debased their currency like we have, but they didn't have any debt. We debased our currency, and we've got all this huge amount of debt, massive debt, and derivatives. So it's like the collapse is going to be much quicker. So that's what I focus on, because energy, whether it's oil, natural gas, coal, nuclear, hydro, even some renewable, or human and animal labor, that's the energy of our economy. And what has been the store of economic energy or wealth for the last 2,000 years has been gold and silver. Unfortunately, in the last 45 years, since Nixon dropped the gold dollar peg, and then back in 62 or 65 when we dropped silver from currency, from our coins, Americans totally forgot. We've got 45 years of fiat monetary amnesia. So now it's no longer, no one has any idea of gold and silver as stores of wealth. They focus on stocks, bonds, and real estate. And those three are going to collapse in the future, and we can talk about that.
I wanted to ask you about the oil right now, and then we'll get into gold and silver. But right now, I mean, the corporate media is out there. Many individuals are out there saying that we have this glut of oil that they're pumping like crazy. And we know that OPEC met, they want to cut production. Why are they pumping out so much oil? What is the purpose of this?
Well, let me prerequisite and start with let's use ExxonMobil, one of the largest oil companies in the United States and in the world. ExxonMobil is the king daddy. They're very profitable. Back in 2008, when the price of oil wasn't actually $97 for the year, average for the year, they had $22 billion left over after they paid all the dividends and they paid all the capital expenditures, $22 billion. Last year, they had to borrow $8 billion to pay their dividends. Chevron, number two, had to borrow $18 billion to pay their capital or their dividends. This is how bad it is. And this year, it's going to be even worse. So the problem is that's the most profitable major oil companies. Let's forget shale. Those are a complete disaster. The shale companies are a complete mess. But the major ones are losing money. Now, let's move that further to the rest of the world. Even though the oil price has fallen, and so it makes costs fall as well, Saudi Arabia is in big trouble. Saudi Arabia, back in 1981, Dave, they were producing like 10 million barrels of oil. By 1983, during our recession, it was down to 4.9. They cut it in half, 5 million barrels a day, Saudi Arabia did. In 2008, when we had the crash, they cut 1 million barrels in 2009. Now they're hemming and hawing about 500,000 barrels. This is the problem. Yes, there's a glut of oil. They're producing more oil than ever. The reason is no one's making any money. They're losing money. That's why Saudi Arabia is selling U.S. treasuries. They can't make money now at this price of oil. They can't make any money. So they're selling treasuries to make up their deficits. And so this is the problem. If they cut, the price may go up a little bit, but they're getting hurt even more. And so what's happened is we're seeing a lot of these oil companies, they're selling treasuries. Even though they want to cut production, they're trying to see the price. They want to see the price go up higher. But we just had a huge build, a record build since 2008 in Cushing, Oklahoma, in the United States. A record build. So the economy is collapsing. It really is slowly collapsing, but it's speeding up. So demand is falling. But this is the issue where I didn't think this would happen, but we're going to go into this crash, this oil collapse with a glut. That's how it happens. And they're producing as much as they can because, and it's the same thing in the shale business. They're producing as much as they can. It's like they're in I think 1 million barrels a day of shale are from bankrupt oil companies in the United States. They're bankrupt. But they have to produce it because the creditors want the cash flow. So we're basically, let's say, having a going out of business sale. That's the reason why what's going on. Now, what's interesting that I wanted to mention, too, is even though OPEC, they said they're producing more oil than ever, let's focus on the Middle East. Middle East oil production was like 22 million barrels back in 1976. It's 30 million barrels today, so it's 8 million more. The problem is the Middle East consumption has increased 8.5 million. So they're actually exporting less oil than they were 40 years ago. This is going to get even worse as their production finally starts to decline and their domestic consumption for their economies continues to increase. So it's a double-edged sword. There'll be less net exports as time goes on. And this just means when there's less energy, Dave, there's less economic activity, which means everything starts to fall apart.
So what you're saying, and let me just be clear about this, if or when they cut the oil supply, not here in the United States, most likely we'll see prices go up. We'll see inflation on products, because if oil prices are going up, will we see inflation on products? And will this make it difficult for people to live their everyday lives?
Maybe we wanted to get into this a little later, but it's a good time to talk about it now. I used to believe in supply and demand. In some ways it does work, but it's very small. The overriding price of a commodity good, or let's say energy, is its cost of production. Has nothing to do with supply and demand. Let me give you an example. I looked at the two top gold miners, Barrick and Newmont. They're the major ones. In 2000 to 2012, their cost of production went up 470%. The gold price went up 498%. So if we take all the supply and demand and throw it out the window, the 470% of that 498% increase in gold was because of the cost of production. This is also the same thing with oil. And we'll talk about this. The Hills Group did this. They spent 10,000 man hours. It's Bedford Hill is a project manager and a bunch of oil engineers, and they inputted this data in the software. Took all this information from the oil industry, and they produced, which is known as the ETP oil model, and it shows how the price of oil goes up. And then they took the actual annual prices of oil and put it next to their plot. And in science, it had an accuracy of R equals 0.945, which is 1 is perfect. So it was almost exact. Well, so supply and demand with oil really wasn't the price mechanism. It was the cost. Unfortunately, in 2012, the price fell, and now it fell down to 30. Now it's like 49. The cost of production, Dave, continues to increase, even though the prices are lower. So it's totally gutting the oil industry, which is why they're producing as much as they can. Now this goes against the whole idea of supply and demand, because they think, well, if the price falls, then more demand will come on, and then the price will go up, and then we'll bring on more expensive oil, which we have. The problem is we can't produce. The price will no longer continue to go higher. And the Hills Group forecast we're going to see $20 heading towards $12 after 2020. And the reason for that, and this is the most important thing for people to understand, it's because of the net energy remaining in the barrel of oil. It has been declining ever since 1900. And so there is less energy available to the market because the oil industry and its whole support systems, which are railroads, which are roads, which are pipelines, which are refineries, which are tankers, all this takes a lot of energy. It's very complex and it's huge. It consumes a lot of energy just to get oil to the market. Well, it's heading towards zero. And when that happens, that means there's really no oil net energy to produce GDP, which is why we're going to have a collapse, and which is why we're seeing a lot of debt now. Debt is being used to offset this falling net energy. And so as the price falls, it goes so counterintuitive of supply and demand. So it totally throws that thing out the window, because it's like let's say a brand new car is worth $30,000. A 15-year-old car, according to the market, is worth, let's say, $5 or $6 grand, because all the parts in the car are no longer, the embedded energy is worn out. The radiator, the shocks, all the parts in the car are no longer brand new. They no longer have a long functioning lifespan. It's the same thing with the barrel of oil. It's costing so much more to produce that oil. There's not much value left to the market, and that's why the price will continue to fall. And so that's why I see deflation. However, we could have hyperinflation of paper money, but deflation of assets. And we can discuss that later.
Well, actually, let's discuss the deflation, because you wrote an article saying that the peak and decline of international reserves warns of massive asset deflation ahead. And you're saying that we're sitting on a deflationary cliff. I know the central banks right now, they're very worried about inflation, and you know they're trying to convince us that they're trying to push inflation up, but you're talking about deflation of assets. What do you mean by that?
Well, we can see what's happening right now in Venezuela. It's like Weimar Germany all over again. They're having measuring goods in kilos of currency. I don't think that's going to happen in the United States because a lot of the money now is digital. The problem is we're going to see two things. We're going to see deflation of most assets, and this is stocks, bonds, and real estate. They're just inflated. And the reason why I can give you a good example, if we look at the numbers, I always go back to the numbers. In 1980, the debt was in the United States $863 billion. It's now almost $20 trillion. Well, it's 23 times higher in just since 1980. Well, amazingly, the Dow Jones index was 865 points in 1980. It's now 19,500. It's up 23 times. S&P is almost 21 times. The U.S. retirement market is up 24 times. Well, isn't that amazing? All our stock market and all our retirement market, the indexes are up in the same ratio as our debt, our national debt. So there's no coincidence there. So all these values are propped up by debt. It's an IOU. As a matter of fact, debt actually equals an energy IOU because you have to burn energy to produce economic activity, which allows GDP to grow or not to grow. So basically, all these debts are energy IOUs, and if we don't have the energy, all these IOUs just implode. That's the deflation. However, I'm not quite sure how that's going to work out with the money. I know that our money is going to really implode, or the value of the dollar. That could happen somewhat similar to what's happening in Venezuela. The interesting thing is there's so little gold and silver. Gold and silver are true stores of wealth, because when you can't sell your home or your stock there's no bid for your stock or bonds, or the bond market finally implodes, no one wants to buy that stuff. But the only values to have wealth, to trade things, will be like gold and silver, because they are more liquid. They're not based upon the energy, because the gold and silver, the energy has already been burned to produce that gold and silver, the coin or the bar. So that's how I see the great deflation. And I mean, I'm looking at this chart. There's 217 trillion of real estate in the world, 94 trillion of securitized debt, which is bonds, 55 trillion in equities, and all the gold produced in the world is 6 trillion. But investable gold is 3, and I believe the investable silver right now is 60 billion. So when those assets, supposed assets, crash, the market is going to get precious metal religion and move into gold and silver, and there's just not much of them out there. That's why the value of gold and silver will rise. Not really the supply and demand, it's just that the demand has, or let's say their value has been offset by the biggest Ponzi scheme in history. So that's how I see the deflation happening.
You just talked about gold and silver and how they're going to be increasing in price. Right now, we see gold and silver, I guess you can call it suppressed. It continually drops in price. Is this being done on purpose right now, so people don't go into gold and silver?
Absolutely. But there is some method to the madness, and let me explain this. There's two ways to value things. There's the store of wealth, and gold and silver are one of the few that have that ability. And then there's the commodity price mechanism. And the commodity price mechanism is the cost of production, and let's say some supply and demand. But the majority of the price of that commodity or metal or energy is its cost of production. Supply and demand add volatility throughout the year. So right now, the cost to produce silver is around between $15 and $17 an ounce, primary. That's the primary miners. They produce 30% of the silver. Well, gold, it's about between, let's say, 1,050 and 11,050. So the market, the manipulators, the bullion banks and the central banks and the Fed, know they can't push it too far below that, because that's the cost of production. So yes, what they're doing is they're trying to keep the assets that they want people to be invested in, which most people are invested in stocks, bonds, and real estate. They don't have any problem with those going up, but they do not want gold and silver. But the cost of producing gold and silver are not its innate store of value. As I explained before with the deflation, gold and silver aren't consumed. Yes, silver is consumed in industrial metals, but it's still the number one, let's say, investable metal. I think more investors are buying silver than gold in ounces, not dollars, but in ounces, like 4 or 5 times the amount. And so this is the issue. When these things start to fall apart, we're going to move from this paper manipulated market of controlling the price of gold and silver based upon its commodity price mechanism. It's going to be finally let go, and silver and gold are going to rise to their store of wealth, their high quality store of wealth. And that's how I see it unfolding in the future, Dave.
Let's get into this article that you wrote back in October, the thermodynamic oil collapse, and why the global economy will disintegrate rapidly. Now, does this still hold true, even though we had the elections in November and Trump is now president? You're still saying that there's going to be a collapse of the system, and we're going to see a collapse of stocks, bonds, real estate. So your analysis of everything that's been going on, nothing has changed at this point?
No, actually, it's like The Big Short. When the guys were in the movie and in real life, when they were looking at the bonds, the mortgage-backed securities, they did really good research, detailed research, and they found out that those things were pure garbage. Well, a lot of people in the different industries, they stay focused in their industry. They don't go out. The one thing I do is I go out and look at how everything reacts to everything else, and energy is the key. So my analysis is constantly updated. I came across this article written by Louis Arnault about the thermodynamic oil collapse, and he's working with Bedford Hill of the Hills Group, who actually designed the thermodynamic oil collapse ETP model, and they've been working together. And so I had to look at that information because, you see, I knew the energy situation was going to get bad, Dave, but I didn't have a timeline. Well, these gentlemen using thermodynamics, and I always thought the price of everything was based upon supply and demand. Supply and demand only move up and down. If you have a price, let's say, look at something from 1900, the price of gold, and you plot the price of gold since 1900 to today. There's going to be a nice line as it goes up, exponentially, really, since the last few years. Well, supply and demand just go up and down. All supply and demand do are change the price of gold up and down a little bit off that cost of production line. That's all supply and demand do. So the thermodynamics actually shows how much energy is in a barrel of oil. And since 1900, we only can access 2/3 of that barrel. A barrel produced in 1900 is the same barrel of energy produced today. However, the cost has increased. We can only get to 2/3 of a barrel of oil. The other third is waste heat. It's totally gone. We can't access it. You can't create any economic activity out of that third of a barrel. So they designed this chart that shows how much energy in that barrel has been used up. Well, by 2022, they say all the energy is used up on an average barrel. There's no longer any net energy remaining. Now, we know this is happening. Why? Because the oil industry can't even pay for itself. I just told you that ExxonMobil had to borrow $8 billion to pay its dividends. Chevron had to borrow $18 billion to pay its dividends and capital, and Saudi Arabia and other oil-producing countries are selling U.S. treasuries now because they're not making enough money. So the problem is the debt that's on these shale oil companies, and now the debt on ExxonMobil. ExxonMobil's debt has tripled in the last 3 years. That debt means that they can't pay the oil. The oil isn't paying for itself. So you know what they're doing? They're stealing energy from other aspects of the market to produce the oil. That's what's happening. We're basically swindling, stealing energy from coal, from natural gas, from other areas to continue producing the oil. So the oil industry will not go down with a fight, but this is becoming harder and harder, especially the thermodynamics proves that the price will continue to fall. Even though we'll see some volatility, the price of oil will continue to fall because the net energy, it's just not worth it anymore. The barrel of oil isn't producing a lot of net energy for the global market. This is going to gut the entire industry, and ExxonMobil is getting ready to reduce 4.6 billion barrels of their supposed reserves. That's like a third of their supposed reserves. They're just going to write them off. And we're seeing this happening all over the place. And people who say, well, once the oil price recovers and heads back up to 100, 120, then everything's going to be fine. Well, it's not. This is the issue. The price of oil will not continue higher. Maybe in Venezuelan dollars it's higher, but not in the overall market. And so this is the reason why we're going to suffer this thermodynamic oil collapse. Because even though there's other aspects of energy we could use, like coal, natural gas, nuclear, there isn't enough time to transition to something else. And oil is actually transportation. Everything runs on oil. Everything moves on oil. So when the oil falls apart, everything falls apart. And it falls apart actually quite quickly. And let me conclude by saying the Hills Group suggests that within the next 10 years, 75% of the U.S. gas stations will be closed. And the global U.S. and global oil industry will have disintegrated. And I asked Bedford Hill, I said, all the engineers that worked on this project with you, how many of them disagreed with your results? He said, not one. And several of them have made lifestyle changes because they knew things are going to get bad in the future. So they came up with this just a few years ago. So that's basically the thermodynamic oil collapse and how it's going to impact everything going forward.
If all these oil companies, they're losing money and they're not making a profit right now, and we have this oil collapse and the economy collapses, will trucks run? Will people be able to get fuel? I mean, what will the situation look like when this happens? What will the everyday person feel when this happens?
You know, it's so difficult to try to forecast where we're going, where we've never been before. Because even the Depression in 1929, there was a horrible depression, and we were just tapping into our wonderful oil reserves. We had the energy to pull ourselves out. Even in the 80s, when we had another depression or recession, we were able to pull ourselves out. And so this time around, I try to think about it all the time. I reflect, what does it look like? Well, I mentioned to you in the pre-interview from the movie Sixth Sense, the little boy said, I see a lot of dead people. I'm not saying I see a lot of dead people, but I see a lot of dead neighborhoods. I see a lot of all these buildings that were built. I mean, you think of a typical 10, 15-story commercial building, you could still maybe power it with let's say electric coal or nuclear power electricity to power the dang thing, but you need cars going to it to fill it with people. Lots of cars moving around, buses, trains. You need that, and this is the issue. What do you do with a 10-story commercial building that you don't really have the energy to run the traffic anymore? That's why all these commercial real estate buildings are just going to be. They're going to be boondoggles. They're going to be just sitting there empty. Just thousands of them. That's what I see. So I think when the thing starts to fall apart, they're going to try to work. They're going to try to manage this collapse. It can happen in many different ways. It could be a Mad Max collapse. I don't think that's going to happen, but that's always a possibility. But what will happen is the trucks will be less and less truck traffic. A lot less truck traffic. You go to Walmart or a typical supermarket today that's totally full of things. It's amazing at what you can buy. Those goods are just going to disappear. There's going to be a lot less goods to buy. I mean, let me just say this. We're talking hunter-gatherers. In the day when they went out, hunted and gatherers, they spent 1 calorie of energy and they hunted and gathered 10 calories of food. It was a huge positive. It was a positive. Our modern agricultural harvesting, processing, distribution is 1 to 10. It takes 10 calories of energy just to put 1 calorie of food on your dinner plate. It's just so inefficient. And the only reason why that worked, Dave, is because we had this very high, cheap energy return on investment years ago. And now shale oil's at 5 to 1. It can't even maintain our agricultural processing and distribution system. It can't even maintain that. And so, which is another reason why a lot of these counties in either North Dakota and Texas, where there's a lot of shale wells, there's fleets of trucks just to produce 1 well. Fleets of trucks. They're destroying these roads. They don't even have the revenue to fix the roads because they're not making enough money in the shale oil industry. So now a lot of these counties are just going to say, well, we're going to let those roads go back to gravel. I mean, that doesn't sound like a country that's going to be great again, does it? And this is the problem. And so I think the situation in the future, when we start really feeling the effects of this thermodynamic oil collapse, things are just going to get smaller. The world's going to be a bigger place. There's going to be a lot less choices. You're going to see supermarkets shutting down, and I don't know the exact way it's going to unfold, but there's going to be a lot less things out there, and there's going to be a lot less economic activity.
Steve, is it possible to use other forms of energy, solar, electric, wind? Is it possible to start now and move off of oil?
No, and there was a study done in 2005, and this gentleman actually did the study for the United States, and he said that if we started 20 years before peak oil, we have a chance of some kind of, we have a good chance of having a transition that isn't too disruptive. If we wait 10 years, there's going to be lots of trouble, and if we don't prepare at all, it's game over. And we're there. We haven't even prepared. Even though there's some solar and wind, I mean, it's 3%. Solar and wind is 3%. Coal, natural gas, the coal, natural gas, and oil, natural gas plant liquids, it's like 85%. We don't have the time now, and we don't have the profitable energy anymore. We did 15, 20, 30 years ago, but we didn't do it. And here's the issue. I think Alice Friedman, who wrote the book When the Truck Stopped, if you want to take a fully loaded semi-tractor trailer, which is 80,000 pounds, it's got 50,000 pounds of food in the trailer, and you want to move that across country, you need a 70,000 pound battery. Well, that just doesn't work. It just doesn't work. The amount of energy, condensed energy in a gallon of diesel, they can't do it in battery technology. Not even with all the new Tesla. We're well past anything now. We've run out the clock, unfortunately, and so there is no plan B, which is a shame. And this is what someone like Louis Arnault has been looking at this for years, and no one has been really working on this. So collapse will happen. The technology will still be around, but here's the thing I want to conclude with. Everyone's afraid of big government, afraid of big big daddy government looking over the NSA and all these different spy cameras. Technology is the most fragile. You take a let's say a shovel that was made 20 years ago, you throw it out of your second-story home, hits the ground, it's fine. You take a computer, you throw it from your two-story window, it's toast. Technology is very fragile. It doesn't last, and it has to be updated all the time. Well, I don't see big government being big government. What happens when the oil collapse happens, Dave, it destroys big centralized things. It destroys Walmarts. It destroys federal governments.